Good morning, friends. My name is Avinash Agarwal, and I welcome you all to Ecoholics YouTube channel. Friends, in this video, I'll be discussing with you important current affairs for 24th of May 2024. In this discussion, I am going to cover three important topics. First topic is going to be about the surplus transfer from RBI to Government of India. So in yesterday's session, we spoke about certain facts, certain numbers. Today, we are going to analyze those facts, analyze those numbers. Where did this transfer come from? Is this good? Is this bad? Is this desirable? Is this undesirable? These are the kind of things that we'll try to answer. We'll try to address these questions, these concerns. Second topic is about the insurance industry in India. So as you know that insurance is a very important, investment, so to speak, to have every individual should have some kind of an insurance, life insurance, health insurance, etc. so that we can take care of, unexpected exigencies in life. So we have a daunting target in front of us that as we approach 2047, we have to manifold grow the insurance penetration in India, which is not easy. So we are going to discuss about this sector, the challenges in this sector, what we can do about this. Thirdly, I will be talking about the power infrastructure in India. So we are in the peak of summers right now, and there is a demand supply gap, that the demand is much more than supply, and that is causing a variety of issues. So how we can solve that problem is something that I'm going to discuss with you. These are the three articles, three topics that I'll be discussing today. Before I move ahead, I want to address a comment left by one of the viewers on yesterday's video regarding the fact that these videos, they need to be concise, the notes, etc. need to be concise. I wholeheartedly agree that eventually everything needs to be concise. Who will make it concise? Who wants to be a ranker, who wants to clear the exam, will make things concise. Because if I make things concise, only I fully and thoroughly understand it. If you make it concise after, let's say, reading the article, after watching the lecture, then you wholly understand it. It will become, available on your fingertips. You will internalize it. You will be able to reproduce it. You will be able to use it. You will be able to creatively use data, statistics, learnings, understandings, etc. in your answer writing, in your interviews, etc. So my advice to you would be that don't rely on just concise material. First, develop a thorough understanding of what's happening around you, and once that thorough understanding has been there, then make everything concise. So like I've always said, that every document that I share with you on a daily basis has 2000 words, right? And it is your job that after watching this lecture of half an hour, spend another 15-20 minutes and convert these 2000 words into 200 words. The PDF is easily available on the Ecoholics app with zero extra charge. Nobody needs to pay anything for these documents, for these lectures, right? So once you have understood, once the understanding has been developed, download the PDF and convert the 2000 words, which normally is the case in these documents, convert it into 200 words. 200 words is equivalent to just one answer. One answer typically takes like 10 minutes to write at max. Take 20 minutes to do this exercise. Nothing more than 30 minutes, obviously. So your total investment is that of 1 hour. Every day you are learning something new about your syllabus, about your exam, whichever exam you are appearing for from an economics point of view, right? And you're sorted. You're absolutely sorted. And then there are always other sources available, which I'm sure you all are aware of, right? Which you can refer to for further value addition. You will be the strongest candidate in India. What more do you want? So taking a targeted approach, taking a structured approach, a focused approach, right? And trying to do a little continuously over a long period of time will take you a long way ahead in your life. Just keep that in mind, right? These are my thoughts, my way of looking at things. I am completely willing to be proven wrong. I am completely willing to be, corrected. So if you think that you disagree with me, then in a logical manner, please try to explain how we should be able to help you out further. We already have a magazine for you, which is concise, tailored, etc. So all of those are free resources. One thing that I have seen over my 8 years career of teaching students any subject is that they don't have basic understanding of what is happening around them for a variety of reasons. Maybe they don't read newspapers, maybe they don't follow magazines, maybe they don't listen to talks. I don't know the reason, right? And because of that lack of understanding of what is happening around them, they are unable to, do what they're expected to do. So just that has motivated us to do this exercise on a daily basis, right? So having said that, if there are any comments anybody would like to make, please feel free to share. Charulata, good morning, thank you for joining in. Everybody else, good morning. Let us start. So first article, RBI surplus. Now, the newspaper, the Mint newspaper is saying that this surplus needs to be explained. That's the simple message of this article. That's it. That you need to explain this surplus. So what has happened is that there is this record surplus of $2.1 trillion, which is more than double of last year, has been transferred to Government of India. Right. Now, there was a Bimal Jalan committee that was established in 2019, and Bimal Jalan committee went into, this aspect of how should RBI manage its surplus, how should RBI, be managing its operations such that RBI as an institution is strong, RBI as an institution is able to meet its mandate, and RBI as an institution is able to deliver everything that is expected out of it. So they created an economic capital framework for RBI, given the fact that it is dealing with trillions of rupees of resources, right? So an economic capital framework for the central bank was created by the Bimal Jalan committee, and the Bimal Jalan committee also kind of, delved deeper upon this aspect, that the surplus so-called money that RBI has, so what should it do with that money, right? So the Bimal Jalan committee gave this indication that RBI should create a contingency risk buffer, that if a bank fails, or if there is, let us say, a sudden requirement to buy foreign exchange and pump it into the market, right, then RBI should have the resources available to do all these things. Help banks, help the economy, help financial institutions, help the currency, right? So RBI should have the resources, the dry gunpowder for being able to tackle these risks. And for that, you need to create a contingency risk buffer. And the size of that risk buffer should be 5.5 to 6.5% of RBI's balance sheet, right? So what the RBI has done recently is that it was standing at 6% of its balance sheet. The size of contingency risk buffer was standing at 6% of the balance sheet. Now that 6% has been increased to 6.5% first and foremost. And then whatever surplus remained has been transferred to Government of India. So technically RBI has not done anything wrong in that sense, that first they have strengthened their own contingency risk buffer so that they are able to meet the mandate that has been set for them as an institution. And secondly, what they have done is that they have transferred the surplus to the Government of India, right? So this is fine, that there is not a problem, but you have to realize that RBI is not a corporate entity. This is not profit that is being given to the parent or to the founder or to the promoter or to the shareholders, right? So this is the term surplus, it's not profit, right? That is something that we need to be aware of. And the problem, the newspaper says, the problem over here is that don't just go by the headline numbers, try to look at the factors that have helped RBI, create such kind of a surplus in the first place and transfer this surplus to the government. How was this surplus created? We have no idea about it because RBI has not given us any idea about it. The only statement that has come out of RBI is this statement over here, that the size of contingency risk buffer is now 6.5% A, and B, 2.1 lakh approximately crore rupees is going to be transferred to Government of India, right? They have not explained where this money is going to come from, right? So now what you see in media is a lot of speculation, a lot of renowned authors, economists, experts, think tanks, etc. They are crunching these numbers and they are throwing out their own panditry out, basically, that this must have happened, that must have happened, right? Now if you see the last year's income statement from RBI, right? So RBI typically has two major streams of income, a foreign source of income and a domestic source of income. Within the foreign source of income, the important source is investment in, let us say, US treasuries, investment in, let us say, bonds of other advanced nations, right? And that. So through that you earn some amount of interest, right, because of those investments. And from the domestic point of view, the major source of earning is, let's say, the interest that the RBI collects from domestic institutions for giving liquidity to them, right, or the interest that it earns from governments when it provides loans to them, short-term loans to them, or the management commission fees that RBI charges, right, for taking care of the borrowing requirement of various governments in India. So these are your typical heads, major heads of income, but we don't know exactly which head has contributed what in this 2.1 lakh crore, right? Now whatever RBI is earning, it has macroeconomic ramifications in the sense that, let us say that if RBI is squeezing the domestic institution, I'm not saying it is, but if it is squeezing the domestic institution earning through that, then you are not doing probably the right thing. If you are charging unnecessarily a higher amount of money from the government, again you're not probably helping. If you're, let us say, indulging in speculative activities in bond market, right, in the international arena, then again that is not advisable. I'm not saying that RBI is doing any of these things. I'm not saying that. What I'm saying is that there needs to be an understanding of how this money is coming, where it is coming from, because ultimately RBI as an institution is important for establishing macroeconomic stability, inflation control and economic growth in India, right? So this supernormal transfer of surplus, right, we need to understand where this is coming from, that's all, right? So we need a brief statement regarding what are the major heads, and hopefully the newspaper believes that next year RBI will be starting this good practice. It's a good management practice. There is no harm in having a little higher level of transparency in your own systems, right? RBI would expect exactly this from, let us say, banks, which RBI is regulating, correct? So RBI in that sense is also a public institution, right? So there's no harm in having some transparency from RBI also. That's the basic idea out of this particular article. I hope this is clear, right? Moving ahead to the next discussion. Next discussion is about the insurance sector, right? So as you know that IRDA, that is Insurance Regulatory and Development Authority of India. So they have created this laudable goal of India insured by 2047, that every citizen and every enterprise by 2047 should have an appropriate insurance cover. So as an individual, I should have a life cover, health cover, property cover, my car should be covered, etc. Right? My travel should be covered, my shoes can be covered, my furniture can be covered, etc., etc. And yes, shoes do get covered, I'm not joking, right? And every enterprise should also have an appropriate cover, not only for itself but also for its employees, right? So definitely there is a lot of enthusiasm, a lot of excitement around this goal and how we can achieve this goal. Now, one of the first things that needs to happen in this sector is that we need to be able to diversify our product baskets, right? Because ultimately you will buy a product. Insurance is a product, right? So you will buy a product if it is accessible, affordable and relatable for you, right? If, let's say, insurance is unaffordable for you, why will you buy? You will not buy. You will not be able to buy, right? Let's say that it is affordable but it's not accessible. The user journey is very complicated, right? You have to jump through hoops, loops and God knows what not to be able to finally buy the insurance product. Again, the chances of uptake of insurance will not be there. Let's say that it is accessible, it is affordable, but you don't relate with it. You don't feel the need for that product. You feel that it is out of context for you. Again, you will not buy insurance, right? So this is the real challenge, that you need to make it accessible, affordable and relatable, right? You need to build capacities, elevate competencies and usher in creativity within the supply chain of insurance, right? That insurance companies, number of insurance companies, you will see that they need to increase. Their products need to become better, more refined, more contextualized, right? Those who are selling these products, they need to have the right competencies, the right approach, the right attitude, the right spirit and so on, right? So let us discuss some numbers and please note down these numbers. They are important numbers. So India's GDP is likely to be $30 trillion by 2047, right? If you see the global average, right? The global average premium as a proportion of GDP. What is premium? So when you buy an insurance policy, you pay something to the insurance company to cover your risk. That is called premium. Okay. So premium can be life or non-life. So if you're covering, let us say, your life, right? Let's say you're taking a life insurance. So that's basically life associated premium, right? Let's say you're covering health, or you're, let's say, covering certain enterprises. That is basically non-life insurance, right? In that we are not covering your life. We are covering certain other risks that you may face, right? Motor insurance, fire insurance, right? Those are basically non-life policies. So premium that you pay for these policies divided by GDP, that number is around 6.8% globally. That is the global average. That premium in the denominator, GDP in the premium in the numerator, total premium in your country, collected, paid, whatever, and the GDP of your country in the denominator multiplied by 100. Find that number for every country and then average it out for all the countries. That is basically around 6.8%, right? So if 6.8% is something that India achieves, India is right now not at 6.8%, we are only at 4.1%. That means that the premium collected as a proportion of our GDP today is around 4.1%. So if we can go from 4.1% to 6.8% by 2047, so that would mean that the Indian insurance industry would be worth $2.04 trillion. $2.04 trillion worth of insurance industry can be created in 2047. There are countries which are above the average, above the global average. You know that global average means that some countries will be above, some countries will be below, right? So for example, South Korea, Taiwan, they are sitting at 11%. That if you take the premium that is, let us say, collected in those countries ka insurance companies divided by the GDP of that country, the number that you will get out is 11%. So if we were to achieve, let us say, not 6.8% but 11%, so then the size of the insurance industry would be even more phenomenal. The size of the insurance industry would be even more phenomenal, right? Now let's say, forget about this phenomenal and all those things. Let's say that we want to make $2 trillion as our target. That Indian insurance industry standing today at $92 billion needs to be $2 trillion, right? In 23 years. So that would mean a CAGR of 14.2%, right? That is phenomenal. Any sector growing for 20 years at 14% CAGR is going to generate huge amount of employment, is going to contribute in a very huge way to your economy, right? And the best part is that this sector, the more this sector grows, the better it is for other sectors, or other players, or other stakeholders, because they get insured, they get covered, right? But the reality is different. Reality is that this penetration, the insurance penetration in India, right, it is nearly stagnant. What is insurance penetration? The same thing, that that number of 4% or something, right? That premium divided by GDP into 100, that basically signifies insurance penetration in your country. That is nearly stagnant, despite the fact that this sector was liberalized 2 decades ago. What is the meaning of liberalization? That private sector insurance companies were allowed into this space, foreign sector was allowed to enter into this space in India, right? All of these things were done 2 decades ago, and despite that, insurance penetration is stagnant, right? Now there are 3 pillars in any insurance ecosystem anywhere in the world. There are insurance companies, there are distribution networks, and then there is a regulatory framework, right? These are your 3 important pillars, and all of them obviously need to perform well for the overall sector to be able to perform well. Now, if you look at the number of insurance companies in India, so there are like 67 insurance companies in India, out of which 24 are offering life covers, 26 are providing non-life covers, 5 are specialized in health insurance, 12 are offering services of reinsurance. Reinsurance basically means that you are insuring the insurance industry. That I am an insurance industry. I have sold policies to you. That means I have covered your risk. That means that if something happens to you, I'll pay, right? But who will cover my risk? What if something happens to me? Then I go to the reinsurance industry, right? They cover my risks, right? So there are a certain very global, very large reinsurance companies across the world, which are really, really important in this ecosystem, right? So this is our landscape. By contrast, in US, there are 2,456 insurers. In China, where the penetration is even lower than us, there are 237 insurers. In UK, there are 402 insurers. You can clearly see that the number of insurance companies in India can grow significantly. And it is not a bad thing. Greater competition, greater diversity, greater productivity, everything is great, right? So if you want to grow 22 times in the next 23 years to go from $90 billion, let us say, to $2 trillion, let us say, right? Then you need more insurance companies in India, right? Our capacities need to increase tenfold. But if you look at the reality again, right, then there are hardly any, large number of companies waiting in line to become insurance companies in India. Foreign companies are looking for an exit. Domestic promoters or promoters in general are not enthusiastic. Why? Why is it that they are not enthusiastic? What does a businessman want to do? He wants or she wants to earn profit. If you look at the situation in India, it takes more than a decade for a life insurance company to become profitable. For a non-life insurance company, it is even more trickier. We don't know how much time it takes. It takes probably more time, right? There is a very important metric in the insurance industry, which is the combined cost ratio. If you look at if this combined cost ratio is greater than 100%, that means that you are not making profits, basically, right? And this combined cost ratio is less than 100%, then that means that you're making a profit, right? Basically, right? So combined cost ratio of insurance companies, for most of the insurance companies in India, it's above 100%, right? So that's the problem. If you see the stock market returns as a barometer of what is happening in the sector, right? So Nifty has given positive returns in the last 18 months, right? Decent positive returns. On the other hand, your star private insurers, HDFC Life, ICICI Prudential Life, SBI Life, they have delivered significantly negative returns in the last 18 months. That means that if you have invested in these stocks, you have actually lost money. You have eroded your capital by investing in these stocks, right? So obviously, we need to have a better narrative a better script that will actually attract investor interest in this sector, right? What is the problem? The problem is something which is very similar to our problem in the telecom sector that we were facing in the last decade, right? Or up till very recently, that so far as prices are concerned, there is a race to the bottom, that who can charge the lowest, right? People generally want to buy an insurance policy that is the cheapest, right? We are a very price sensitive market. All this needs to change, right? Because every good thing has a cost associated with it. It has a value associated with it. Tomorrow, typically, if I go to a hospital to get myself treated, and if that insurance company is going to, let us say, pay me 1.5 lakh rupees for my treatment, and if I'm buying that insurance coverage from that company, I cannot offer peanuts to them, right, to cover my risk. I have to give them something in return, right? So that needs to be taken care of, that this race to the bottom really needs to stop. And for that, there has to be maturity within players in the market, and the regulator also needs to give a holding hand, right? And secondly, the other problem is a high customer acquisition cost, given the fact that literacy in general and financial literacy in India is nothing great to speak about, right? So there is a very high customer acquisition cost, especially outside of your metro city. You really need to go and educate people why you need an insurance cover. Typically, people will have this attitude that, you know what, I'll set aside 1,000 rupees per month, 2,000 rupees per month for the next 10 years. And if any problem arises, I'll take care of myself through my own resources. Why should I give you, let us say, 5,000 rupees per year and lose that money if nothing happens to me? It doesn't happen. This kind of an attitude doesn't work, right? And globally, the insurance industry is working for a particular reason, right? So now what is happening is that policy distributors, banks, NBFCs, they make a decent amount of money selling insurance, and insurers themselves are not making a lot of money. So there is a lot of problems. Supply chain is clogged right at the start, right? There are compensation payment issues, right? There are management expenses issues, right? So some of these things need to be, kind of streamlined. Okay. So the idea that you need to keep in mind is that the sector has been liberalized, regulator is charged up in the right direction, right? And we need to basically re-engineer the business model of a lot of insurance companies, right? And we need to really enhance capacities in a very big way. Otherwise, our 2047 target is not going to be met. So this is a little bit about the insurance sector, right? This is something that you need to be prepared for, because they will not ask you that, oh wow, 2047 is the target, still let's start doing cheerleader dance. No, they are not going to ask that. They are going to ask you problems in this particular journey, and this article gives you a sense of what is the problem in that journey, right? The 10 minutes that you have spent, that's a good investment, right? Now, if you read more a little bit more about the insurance sector, you will start understanding. You'll be able to put the pieces together. Okay, that this is a problem in the insurance industry, right? Moving ahead. Power crisis. Are we in for another sizzling summer, right? So, what is happening in India so far as the power sector is concerned, right? Typically, what is the crisis? A shortage of power, right? Right now, we are, at a point in, our journey where the night time power deficit in June, the coming month, it is likely to be the widest since June 2010, right? So the demand is pegged at 235 gigawatts, the supply is around 221 gigawatts, and there is going to be a gap of 14 gigawatts. This is the night time power deficit that we are talking about, right? If you look at the peak power demand, so it has already touched 230 gigawatts already, and it is expected to go up further, right, as temperatures and conditions become unbearable for people, right? Why is it that our supply has not increased? Because our projects have gotten delayed, because our coal fire power plants that were supposed to get created have been delayed, because hydropower generation in India has fallen to, the lowest in 40 years kind of levels. Because if you want to generate hydropower, you need water in dams, and if that water is not available in dam, then what is going to fall on the turbine? If nothing is going to fall on the turbine, turbine is not going to generate power. So why is there no water in reservoir? Because it was a harsh summer, right? So water got used up, right? So there is no water in the dams, and therefore hydropower generation is at a low level. Renewable energy output is flat, and there is above average temperature that India is witnessing across many stations, as a result of which power demand for air conditioners, coolers, and God knows what not is very high, right? It's basically an annual affair. Power shutdowns are a recurring affair. Daytime power deficit was a very big problem in India at one point of time. Daytime power deficit was a problem because industries work primarily during daytime. So there is significant drawal of power during daytime. But thanks to 4x increase in solar capacities, right, we have been able to take care of our daytime demand. daytime demand is no longer a problem for India. We have a different problem. We have a nighttime deficit now. People, as aspirations move up, as your electricity consumption moves up, so nighttime demand is becoming a problem, right? So what are the steps that the government has taken? Government has taken, they have already taken like 6-7 steps. For instance, they have deferred the maintenance of power plants. They have restarted the old inefficient power plants that were shut down, right? They have allowed imported coal-fired and gas-fired power plants to operate at full capacity, right? We don't generally allow this because, you know, we want to discourage imports of coal on gas, but in this case, we have allowed. All thermal power plants have been asked to work at peak capacities, right? We have fast-tracked the completion of our projects. So we have taken all the steps that we can take, right? But the idea is that the power demand will continue to increase. Capacity additions have to be planned and executed on time. We need to also think in terms of creating buffer capacity for night time. What do I mean by buffer capacity? That generate excess power during daytime by having even more solar power plants and store their power in batteries and then release that power in the grid at night. Look at these kinds of solutions. So if we can do that, then we'll be able to take care of nighttime deficit as well. And eventually we need to have the right balance of thermal, gas, renewable, nuclear and every kind of power source. Because if we really want to achieve a Viksit Bharat status or whatever by 2047, right, then one basic thing that we need is power apart from insurance, right? So this is my submission to you guys today. I hope that this made sense. If there is any question that you all have, please feel free to ask. Otherwise, I am going to be closing this session. So Swarna Lata, good morning. Thank you for joining in. You all can always reach out to us, as you know, right? So it was nice interacting. I really love discussing all of these things with you guys. I would love to hear your thoughts. I'll close this session now. Thank you so much. All the very best and Jai Hind to all of you guys. Thank you so much.